So hi everyone, thank you for so much for joining me today. And today's topic is going to be very interesting. I'm going to show you the strategies how you can protect your personal assets without paying stamp duties and capital gains tax. And you're probably wondering why should I have to protect my personal assets? And you might wondering say, I'm not rich. Who's going to sue me and things like that. So what I'm going to do today is I'm going to show you a few true story that because they don't protect their personal assets and things gets really bad. So what I want to say is today is that this is live on Facebook as well. And I also recording this as well. And if you stick with me to the end, I'm going to have a gift for you as well. I just finished this ebook. It's really good. It's about how building up the structures and how to protect your assets and all that. So if you stick to the end, I will give it to you for free. Okay. And basically to protect your assets is to do with setting up the right structures and all that. But I have a lot to cover. So before I go on to the main topic, I want to share with you a true story, a true case that happening is people think that this never happened to them, but it actually did. Okay, so Michael and Tom, they are good friends. And in one afternoon, they just sort of went out and played golf together. And then what happened was that things that happened, the accident happened that actually changed both of their life. And it was very sad. So what happened was that Michael was playing golf and he accidentally hit Tom's head right here. And then Tom just sort of fell over and then he actually in coma. And what happened was that Tom is actually the one that making money for the family, and they have two children. And they're good friends. They're good. Two family are very good friends. But because of Tom's unconsciously in hospital and they don't have the income coming in, and it makes the family really hard. So Tom's family side actually asked Tom's wife to sue Michael for $3 million. And because what happened is that the accident was negligence by Michael, and it wasn't intent, but it was accident. But Michael should check and all that, and he was sort of carelessly did that. Then what happened was that the wife sued Michael $3 million, and Michael have a business, and the business was in the trust, which is okay. So the business is safe. But then all his personal assets, like his home, he owned like 3 investment property. It's also in their name. And then also he owned cars and a lot of personal assets. It's all in Michael's name. Because as you know, in Australia here, if you own a home, it's better that you own it in your own name, because then you can get all these benefits, like you don't have to pay land tax. And when you sell the property, you don't have to pay capital gains tax, right? But then the disadvantage of that is like, because you own it, it's your personal assets. If you did something wrong and people trying to sue you, then all your personal assets are at risk. And this is what happened to Michael. So what happened was that he had to end up selling all his assets to pay for that damage, because he lost the case because it was a negligent. And the other thing is that the insurance will not cover him, because the insurance doesn't cover if it's negligence or careless. So Michael have to sell all his personal assets and even his business as well to make up that $3 million to pay to Tom's family because of this happening. But if Michael actually proactively protecting his personal assets and then put it in, a trust like that is not in his personal name, then the worst thing can happen with him would be that he can declare bankrupt, say that I don't have the money to pay you, and maybe I can pay you some, but I don't have $3 million. But because he got all the home and the investment property all in his name, he have no choice. He have to sell those and pay for the damage. So what I want to say to you is, like, you're probably thinking this can never happen to me, but accidents happen every day. And sometimes, like, you might drive the car so carefully, but then you drive through the crossing and then people not looking at it, or like you thought that there's no one, but then suddenly someone run into it, and then you hit someone and someone die. And then when you try to claim the insurance say, no, it's your negligence, we're not going to cover. Then the other family will try to sue you personally, and then you're going to be lost everything, and that's going to be like devastated, like that is really going to be very bad. So today, what I'm going to do, I'm going to share with you a strategy that it works. I can tell you that it works. It's because I've been in this business for more than 30 years now. So for people that don't know me, I just want to take a moment to introduce myself, tell you a little bit about me. I have been in this accounting industry for so long now, more than 30 years, and I'm the FCPA and also Salmon Super Fund Specialist, a registered tax agent. And if you ask me 30 years ago, like, will this strategy work? I'm probably going to tell you that I said, I'm not sure because I haven't seen it yet. But then after this 30 years pass, I can tell you that the strategies that I'm about to show to you, yes, it works. It really can protect your personal assets, but you have to do it earlier. You have to do it sooner. You can't wait till things happening to you and you say, I want to protect my personal assets. It's not going to work because then it's going to be too late then. So it's very important to understand that. So before I get started to go into the strategy, how it works, and show you step by step how this can set up and all that, I just want to ask you some questions that I am not sure about. Like, why should you consider assets protection, even if you think you will never get sued? Like, a lot of people say, I did nothing wrong. I'm a good girl, good citizen, good girl, good boy, whatever. I will never do anything to hurt anyone. Why do I have to worry about protecting my personal assets because I will never get sued? So what I want you to do is, like, I'm going to get Maris to bring up that poll, and I want to have a bit of understanding about what you're thinking and where you're at, and then we can continue. Would that be okay? So I need every one of you to participate in this, and this is very important for me to get that insight from you because we're running like a webinar, so I don't really see you face to face. So it's very important for me to understand how much you're understanding about this. So have a look on your screen. It should bring up that poll. So Maris, can you go ahead and bring up that question? And so basically the question is like, why should you consider assets protection even if you think you will never get sued? A, because the lawsuit only happen to other people. You might think that. B, because you may want to avoid paying your debts. Or C, because life is unpredictable, and which is true. And assets protection can provide a safety net in case of unforeseen legal issues. Or because assets protection is a legal requirement for everyone. So I'd like you to take a moment to answer this question for me. And then after that, I will share the results with you to see what everyone is thinking. So Maris, is that on at the moment?
Yes, it is on, Eng. It's 100% on C.
100%. Oh, okay. Wow. C, right? Is that right? C? I got it?
C. Yeah. Yes, we have nine answers on C.
Oh, okay. So it's 100% in C. So that is amazing. So it's true because you never know. Life is really unpredictable. So another question I want to ask you is, and then I promise you, I will get into the strategy. Okay, I want you to answer this question as well. Like, suppose that you unexpectedly lost everything, all your personal assets, including your home, your investment property, all your hard-earned money, everything that you own now. Suppose that you lost everything due to the legal issue. How concerned would you be about the abilities to recover financially, and would your family be okay? So basically, let's say today you lost everything that you've been working hard for the last 10 years or 20 years or maybe 5 years, whatever. Will you be okay? Like, would your family be okay? So A, how concerned are you? Like, A is that extremely concerned, and it would be devastating for my family. B is like, somewhat concerned, but we could eventually recover. That's good. C is that not very concerned because I don't think, it's going to be bother me as we have other resources to rely on. Okay, good on you. D is like, I'm not concerned at all as I don't believe it could happen to me. So I'd like you to take a moment to sort of pick one, and then we share the answers and to see what everyone is thinking.
We have 4 answering extremely, okay. 1 answered somewhat concerned.
Okay, all right. Okay, that's great. Thank you so much, Maris. So we have 100% say it's extremely concerned and it would be devastating for my family. I mean, I agree with that because it's very hard. Like it's very hard to have what you have today because you work very hard and you pay off your home, or maybe you haven't, and you have own investment property, and suddenly if everything's gone, depending on your age, I mean, for my age, it's probably going to be very hard to go back to 20-30 years ago to work hard and to build it up again, because I'm running out of time now. I'm getting old now. But for younger people, they might think, that's all right, I still have time, I can make it up again, that's fine. But for the people that maybe about 40 or about, you already build up, or for people that already build up a lot of assets, it's going to be hard, especially you have family already, and it's just the time, like, because life is very short and we all have, very short period to live. So it's going to be very hard. So, okay, that's really good. So you are in the right room. I mean, you are in the right webinar, and this is exactly what I'm going to share with you, is to show you how you can protect your personal assets without paying heaps of money and without paying like lots of stamp duty, or maybe you think that, is that means like if I have to protect my assets that, I own all the investment property in my name. If I have to transfer to another entity, I'm going to pay a lot of stamp duty. I also have to pay capital gains tax. So I'm going to tell you, you don't have to do that. And there's a way to do it. Okay. So what I think is the best ways to explain to you how this works is by case studies. And the case study that I'm going to share with you, it's a real life case that the client came to us, but I just changed the name. And it's a real strategies that we implemented for our client. And okay, so this is about Adam and Amy. Okay, this is a make-up name, but it's a real true case. So they're both working for a long, long time, and they accumulate their assets of 4.8 million. And now what happened was that Adam wants to start his own business, and he wants to go and partner with his friend. But his friend doesn't have as much as what he have. And he already built up a sizable assets and all that. So he's very concerned. He say, if I go and partner with someone to start up a business, I am concerned about my risk, because what if the business fail? What if something's not right? Would that affect my personal assets? Because at the end of the day, I don't want to lose everything that I've been working hard for. So the goal is that they want to protect their assets, and they want to build a wealth for a comfortable retirement. Then we find out what is the problem and what are they concerned. The first thing that I just told you is like Adam wants to start a business with his friend, and he's worried about the risks and liabilities that associate with being a business owner. The second problem, second concern that he have is like he worry about the potential lawsuit if something happening, like accident happening or anything that happening, he worry about that he's going to lose his personal assets. And he also worry like he owns investment property in his own name. And as you know, if you own an investment property, you can have a tenant insurance. But then sometimes if it's due to the landlord's negligence, the insurance might not cover. And there's a lot of case about this. Like there's a case in Melbourne that this old woman, she rent this place from the landlord. And then what happened was that when the house is very old, and then one day the going into the bathroom, there's a hole there, and they always get the carpet to cover it. But one day she decided to take out that carpet, and then she went and clean it and dry it. Then she forgot that there's a hole, like it's just not that big hole. And she told the agents to fix it up for her for many, many times. But the agent doesn't tell the landlord. And what happened was she tripped over and she hit herself, and it was really bad. Like she was injuring herself in the bathroom. And then she's suing the landlord for that. And apparently the landlord lost the case because it's due to negligence. Because if you rent out your house, you have to make sure that the house is it's rentable, like it's good in good conditions, that the people can live there. And if something is it's not right, you as a landlord, you're supposed to go and fix it. And if it is also depending on the agent as well that help you to look after the house. So in this case, I share a bit of this sort of story with Adam and Amy, and they sort of say, yeah, I'm concerned as well. So what should I do about it? right? And then another thing is that they worry about, I was giving you an example about car insurance. Is like sometimes like you might drink dry and you forgot, and it might just accident, but it was like a negligent, and so the insurance it's easy for you to pay the premium to them, but it's very hard to claim, because when you want to claim insurance, you have to prove a lot of things. And if they prove that you're negligent, then they're not going to pay you. So then you will have to be personally liable for it. And so that's going to be a concern. And also, they're also concerned about like, oh yeah, we want to protect our personal assets, but it's going to cost a lot of money, because do you mean that we need to transfer our assets to a trust or another entity? That's going to cost a lot of money, because to transfer one property, let's say if you want to transfer one investment property that you own, and let's say it's worth $1 million, do you know how much is stamp duty, right? In New South Wales, at least it's like 2-3%. And that's a lot of money to pay for the stamp duty. Not only that, when you want to transfer the property to another trust, it's just like the trust is buying the property from you. So you're going to be up for capital gains tax as well. So if you're adding up all these excess costs, it's going to cost a lot if you do the normal way, and it's very expensive. And I agree with that. And that's why today I'm sharing you a strategy that it's so good. Like, you don't have to pay that much money. Okay. So that's the okay. Another thing is that they're also concerned about, like, worry about their children future if they lost everything. Like, imagine that Michael's case, right? He built up so hard, he got all these assets, and then suddenly just one accident that happening with his friend, he lost 3 million. Like, he lost everything. And then what about his children, and what about his family? So it's really devastating. Like, it's really sad. So same as Adam and Amy, they worry about that they're going to lose everything. So what we did for them is, like, after the Discover meeting, and then after we collect all the facts and everything that they wants to have and wants to do, then we will always come up with like 2 options for them and say, okay, you can do two options. The first option is that we can do the expensive way, which is, this is the perfect way, okay, but it's very expensive. Is we transfer the assets to the trust. That's like selling the properties to the trust. But then you're going to incur the stamp duty, and you're going to incur the capital gains tax. And when you add it up, it's so much, 100,000. It's very expensive. But it's a very secure way, and it's 100% sort of like you can protect it really solidly. Okay. But if you already own the property, like, for example, your home is in your name, your investment property is in your name, and you still want to protect that in case that something happened to you, there's another option, which is option 2. It's a smart way. It's like, I'm going to explain to you how this works. Is we transfer just the equity value of those assets into a family protection trust, and then it's owned by the Family Protection Trust. And therefore, should anything happen to you under your own personal assets and liability, it shows like you own nothing. You're penniless. Like you don't have anything. So the thing that now the lawyer is very smart as well. If, let's say, Tom's family wants to go and sue Michael's family, right? And let's say they don't have the money, but then when the lawyer go and search around and see, wow, you own like 5 million's worth of assets all in your name, then normally the lawyer will say, don't worry about paying us the fee, because we are confident that we're going to win this case, because he's negligent, he's at fault, everything proof, all the evidence proof that he's wrong. So I am the lawyer, I'm very confident. So I will say, you don't have to pay a fee, because with Tom's family, like they're really short of income because Tom is sick in the hospital. Then they will say to the wife that all you have to do is just have to sign a paper to agree for us to proceed with this lawsuit, right? And then if we win, we're going to take 30%. And imagine if they win 3 million and the lawyer takes 30%, that's a lot of money for them. So in Michael's case, because they saw that, and so they say, I'll offer no win, no pay. Like, you don't have to pay us. So then the lawyer will work really, really hard, because they want to win too, because then they can get a lot of money. So when we do the protection of the personal assets in this way, we transfer all the myths, all the good thing, the equity to the family protection trust. When the lawyer go and check on you and they say, yeah, you might own your home and you own your investment property and it's worth like 5 million, right? Let's say 5 million or whatever. And then they saw this, oh, there's a liability of 5 million. That means like assets of 5 million and liabilities of 5 million. What is the net equity? Nothing, right? So the lawyer say, oh, no, this case, this guy own nothing, like his net equity, net worth is zero. And it's going to be very hard to sue him for the money because his structure is quite complicated and I don't know where his assets is really sit and things like that. So the lawyer will say, before we can go on with this case, I need 50,000 from you or, whatever the money to put it into our trust account so we can deduct our fee from it when we do the search and when we do something. So it just make it harder for them to sort of proceed. And then if the person that tried to sue you that they're already broke, like they don't have the money, where are they going to get 50,000 or 60,000 or whatever the money to give it to the lawyer? And if they can't get that money to give it to the lawyer, then the lawyer is not going to do any work because people don't want to do work for free. So then you might be able to get away. But then if, let's say in example, back to that case, like, Michael and Tom's case, if because you're a good friend, and if you know that Tom's family might not be able to get anything from you, but since you're a good friend and you can see that you want to help anyway, because you feel really bad that you hit Tom and now he's unconscious and he's in coma. Out of the good heart, you know that the family can't get anything from you, but you want to go and help. So you might offer them some money to help them or maybe offer something and you're not going to be losing everything. That's what I mean. Like you might say, okay, I'm going to help to look after Tom's family for a long, long time until Tom can recover, things like that. But you don't need to because you don't have to. But out of good heart, you want to do that. So it gives you that choice. So what I mean is that when we want to go and protect our assets, doesn't mean that we're going to go and cheat on someone and take advantage of someone and do something wrong, but we just want to protect ourselves and our family. That's all. Okay. And so how the strategy work is like, I'll explain to you slowly. First of all, we need to set up what we call here is a family protection trust. And this family protection trust is a very special trust. It's like a bloodline trust. When we transfer all the equities and everything into this family protection trust, it only belongs to your family and it's only passed on to someone that is bloodline, like your kids and anyone that related to you. It's not going to go to other people. So first we set up this family protection company and it's a special leading company. And then we set up this trust. And so this trust is all belongs to the family beneficiary and it's all in the bloodline. Okay. That's the first thing that we have to do. Then we have to work it out like how much is your equity. So in Adam and Amy's case, we work it out that everything that adds up, their home, the investment property, they have 4.8 million. So how are we going to protect this 4.8 million is first, Adam and Amy, like this is all done by the lawyer and it's all legitimate. It's all by legal paper. They will give this equity, give this $4.8. It's do it in all legal, okay? Give this not in real money. It's in the promissory notes. It's in some sort of document. Give all this equity to this family protection trust. Now, this family protection trust is your family, owns this 4.8 million. So in return, they say, okay, I lend you back. Adam and Amy, I lend you back. It's just like you go to the bank and then you want to borrow money to buy your house. The bank will want to take security over your home or your property before they lend you the money, right? So same thing, now the 4.8 million belongs to Family Protection Trust. So now they say, okay, when I loan you back the money, I'm not going to loan it for free. I'm going to take charges. I'm going to take charges over all your assets, okay? So basically, if anything happened, all the property have to go back to, it belongs to Family Protection Trust because it belongs to the family now. And they loan back and they check charges over all this. And that's why when the lawyer look at the land title, they will see that, the charges belongs to family protection. Like you can name it. You can name it anything. And in this example, I just name it family protection trust. But you can name it like Adam and Amy family trust, whatever. Like you can name it anything. It belongs to it's charges over this. That means like this, all the equity is nothing. Like assets minus liability is zero. So they own nothing. Then it's going to be hard, right? So in their case, they're like penniless. They're zero. They got nothing. So that's how you protect it. And we do it by way of, we get the solicitor. We coordinate with the lawyer to get all this paperwork prepared for you and get it stamped and get it sealed and get it executed as a legal document. But there's a problem here. Is like, let's say if you do it today and something happened to you tomorrow or maybe next year, this strategy is not going to protect you because there's a callback provisions in the law. Is the bankruptcy callback. It's like within 4 years, if anything happened to you, like some accident happening and all that, I have to say, I'm sorry, like it's not going to cover you because they can call back. They can call back whatever that we do today. So that's why it's when you want to protect your assets, it's better that you do it when nothing is happening to you and you need that time to pass. So the sooner that you do, the better, okay? Because it takes time. It takes time to be effective. Anyway, that's why we say, we're never going to get sued, so we're not going to worry. But when you get sued and then you worry, it's too late already. That's what I'm trying to say. Okay? So that's what happens. So all the property, like the home, the rental property, all the net value of everything, it's all transferred to this family protection trust. And this is how we protect all the personal assets and without paying any stamp duty, and there's no capital gains because all the titles and everything is still in their name. Like we haven't really sell to the trust. We just transfer the equity part to the trust. So there's no capital gains tax. And also because there's no transfer of title, there's no stamp duty. They might incur a bit of paperwork fee is because of the loan mortgage fee. It's just like you go and borrow the money from the bank. And when the bank wants to take the mortgage over your home, you have to pay some sort of mortgage fee, but it's not stamp duty fee, okay? It's not much. It's very little. And by using this strategy, you can protect all your personal assets, including not just the home, also your diamond, your jewelry, your gold, whatever that you own, you can all protect it. And this is a really smart strategies. And like what I say, if you ask me 30 years ago, does this work? I will say to you, I'm not sure because it was like, I haven't gone through so many cases yet. But after 30 years until today, I will tell you that, yes, it's proven that it works and it's really worked. And I've been through so many cases that we actually can protect our clients' assets, which is really good. So what I want to sum it up is like the strategy is called the Family Protector. So it involves setting up a special purpose trust. It's called a leading member discretionary trust. I know all this term might be say, what's all this mean? So, well, don't worry. If you come to us and then we helping you to do this, we coordinate with the lawyers. We will go through the documents and explain bit by bit for you, and you will be able to understand what all these terms mean. Okay. This strategy can serve as long-term wealth, and it's also provide the assets protection, and they ensure the assets are held for the benefits of your family. Okay. Okay, what is the impact of this family protector strategy for Adam and Amy? You might wondering, I say, how does this family protector assets protection strategy benefits Adam and Amy? Well, basically, it's really give them that peace of mind, right? And that they're knowing that all their assets are protected. So that's the really main benefit, is giving that peace of mind. And not only that, like for Adam, he can sort of release like, I can go and do business with my friend now. I can be a director of a company. I can be like, I don't have to worry that if I did something wrong, or if the business that we partnered together fell, I'm going to lose everything, and my family going to be in trouble, in a hardship. So that peace of mind is worth a lot. It's priceless. And maybe you're wondering, you also can feel free to ask me any questions on the chat box as well. But this is the question that comes up from our client, that asking us, like, strategy save us money? Like, that how did this family protector assets protection strategy help Adam and Amy save money? Well, you tell me, because I just told you that you don't need to pay stamp duty and capital gains tax. That is a big saving, right? So it does. Like, this strategy is really cut a lot of costs, because you only transfer the equity value of your property into this family protection trust. You don't need to pay stamp duty and capital gains. That is the big saving. So yes, it does. It saves a lot of money. And then another question you might ask is like, how does this family protector benefits my children? Well, basically, when you transfer all these equities into this family protection trust, when you can set up a will, or I'm not going to go into the estate planning or the will today, because that's another topic. It really can provide your children with greater financial security and stability for their future. That is, during your lifetime, it protects all your personal assets. Also, when you pass away, it can also protect that as well. And to be able to transfer all the equity into the family protection trust is actually make it really good for your estate planning side as well. And yeah, I'll just sort of share with you, like, another question people ask me a lot is like, so what kind of assets can you transfer to a family protection trust? Well, basically it's anything that owned by you. Like, your property, your cash, your car, your boats, your content, your jewelry, anything collectible. Like, anything is valuable to you, you can transfer, you can protect it all. And you can protect the wide range of assets against the risks and the threats. Like, let's say I'm just going back to Michael and Tom's case again, and let's say Michael protect all his personal assets. It will make his life like big different until today. Would you agree? And even with Adam and Amy too, should anything happen to Adam, fell in the business and the partner thinks it's not working, and because he's the richest guy, the creditors will go after him. But if they can't get anything from him, then they save, they protect all their personal assets. Then he can take that as a lesson, and then he can start again, right? Otherwise, if you lost everything, then you have no choice. You have no chance. So I just want to sum it up. It's like, secure your family future with the family protector. It's a smart choice to protect your wealth, and you can avoid, costly mistake, and you give you that peace of mind. So what I want to say to you, like, you're here today, is you should consider, and if you're concerned, like what you just say, then you should act now and don't wait, because you can either, like, now that you understand this strategy, you have the choice. You can either, maybe find a lawyer that knows these strategies that can help you to do that, or you can come to us. And because we've been doing so much, we know what we're doing, and we have a lawyer that specializing in this, the family protector, and we know exactly how it works and all that, and we can help you with that. Okay, but act now, don't wait. So lastly, is I'll give you, we have this 15 minutes free consultation. So if you need our help, just feel free to call us, or you can email us, or you can visit our website. And in the website, you can see that there's contact us button. You can click there, put your name, put your detail. And then when you send through Maris and the team, they will get back to you and call you back and make a phone appointment to speak to our, our accountant, or to be able to help you to do these strategies. Okay.